Hey traders, Dennis Wilburn, the AutoPilot trader. I'm going to show you three things today. One is I'm going to show you how to do some order entry on the TDAmeritrade ThinkorSwim platform, a really nice hack that'll help save you time entering orders. Two, we're going to share three stocks that are setting up for next week, and I'm going to actually put in the order. You want to watch it to the end. So let's get going to today's session. Remember, this weekend's a 3-day weekend. Happy 4th of July weekend to you, and aloha. God bless everybody. So let's get going right now. Aloha everybody, this is Dennis Wilburn, the Active Trend Trader. I want to welcome you to Trade Your Way to Wealth and Financial Freedom. I have both Neil Parikh and Steve Farrar coming into you guys live. Anyway, I want to welcome everybody. Remember, this is, gosh, it seems like we keep having these 3-day weekends. And this is Independence Day, where we are basically celebrating the independence of the United States. And just, being a patriotic guy that I am, I will be celebrating certainly, and I hope you do also with your friends, families, and being thankful for what we do have in this country. You're going to hang on to, I have got a surprise for you with today's session. You're going to want to watch it, and you may want to also be ready to trade. That gives you a little bit of a hint of what may be coming down the line. Remember that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. So just real briefly, Neil and Steve, in really short, what's your assessment right now of the market?
Ready to start to take trades, and I have been for a couple of days.
Okay.
I think there's a chance we hold this level. But if we don't, they got very short leashes.
Okay. Neil?
I have my triple screen signal. Everything is on the sell side. So I'm waiting at least for MACD to cross.
Okay. Yeah, I came away, and if you recall last week, what I was basically talking about is that we had a very strong potential of a bull trap. And the bull trap actually sprung on Monday, Tuesday, Wednesday of this week. But there may be a silver lining to this cloud that you want to be paying attention to. Here's what we're sitting at as of that's where we were last week. And as you can see, the indexes were down considerably, but it has gotten worse since last week. As you're probably aware, the S&P has had the worst performing first 6 months of the year since 1970. I think the Dow, the worst performing first 6 months of the year, I think they said since 1966 or 67 or something like that. For the NASDAQ and the Russell, it's the worst in history, the worst performance for the first 6 months of the year in history. Now, what do? You throw in the towel and say, oh, well, the heck with it, we'll come back later. No, that's when you miss the big moves, and we don't want to miss the big moves. This is ugly. The thing about it is to keep in mind, what is the history? Now, history doesn't have to repeat itself, but the history will sometimes rhyme with what's going on. That's why we do chart analysis, because we expect patterns to repeat, and they tend to do that because the patterns that are repeating reflect the personality of the people who are trading. So if you are joining us over on the YouTube channel, please just check in and say, hey, I'm here. I'm sitting there looking to see what's going on. We're glad you're over there. I know some people join over there occasionally. And so if you are, just drop a note and say who's there. And so let's go ahead and take a look really quick, because we do have three great stocks to look at today.
Dennis, can I make a comment on history?
You can.
On a website I follow religiously about a week ago, if you look at all of history and back to 1950, in all of the corrections more than 20%, 75, we have a correction of our current size, 78% of the time we've got higher highs 3 months to a year out.
I agree. Yeah, I don't. Another part of history along that same line, Steve, is that when you have a significantly hard downside for the first 6 months of the year, that the end of the year can oftentimes be have a gain of somewhere between 20 to 24%.
Absolutely.
But the thing to remember is that 20 to 24% doesn't necessarily have to change it from a bear market into a bull market.
That's correct. Still be a bear.
So, okay. Hey, here's what we got in the spiders. As I was talking about a little bit earlier, here's what we have going on. Very interesting. Here we were that was last Friday. Strong move up above the 8-day moving, 20-day moving average on the S&P. Monday, spinning top, stalling type techniques. And I told, I basically share with everybody, I was expecting stalling either where it was at or somewhere between the 34 and or the downtrend line. Well, it happened just, almost right out of the bat. Monday, Tuesday, Wednesday, the the bull trap was sprung. Typically basically this, I have to take a look at it and say, okay, this was profit taking by the bears who were short the market. At the same time, though, and I want to throw out this caveat, is the last 2 days have been very interesting. Rather than continuing to hard sell off like we've done in the past, we have two spinning tops which are indecision type candlesticks, which could point us towards what? A higher low to blow out back above this high right here. And then we would have the ingredients, or we would be basically fully into a new short-term uptrend, which could in fact take out that trend line and go up and try to retest this area about the 418, 415 level. Like I said, that's a little bit of not a little bit, that's very much a silver lining to the current, trades that's been going on. Does it get us out of a bear market at this particular time? No, it does not, but it's certainly something to be looking for. If this wasn't a 3-day weekend, I would be looking at buying right here. But there's just too much junk that can happen, especially in this very news-driven world. So I am not going to take a position yet. I will let that work out. What about the NASDAQ? The NASDAQ also showing us something very, very similar. What's going on? A little bit harder sell-off, but I was noticing on this was Thursday. Look what happens. The low of Thursday closes this gap up right here. So that's very positive. That gap is a strong level of support, and we're getting something similar. We are still, clearly we are still below all the moving averages. However, we're getting a spinning top doji. All those are indecisions. We've got a higher level of support that held. So again, with the NASDAQ, we have in place a potential higher low. And if we take out the high of yesterday's candlestick, it will break back above the 8. And we'll see what happens when it gets up to the moving average line, not the moving average, but the downtrend line. But this was a very classic move. Classic move. Monday, I was looking at this Monday. I'm going, dadgummit, this is going to be a bull trap. And sure enough, pow, it happened, dropped to the downside. And then the Russell, I really like the Russell. It's showing a little bit, similar type candlestick, but clearly. And so basically, I'm just, I'm looking at a similar type situation. As I said last Friday, I said, if we get a bear trap and we basically sell off, be very observant of how low we sell off. And because if we sell off to a higher low, that could be a trigger to get into a trade to the upside. Now, I do not have my momentum shifting around yet, and I need to close back above the 8-day moving average, but things are looking very interesting. Now, if we blow out yesterday's low, then I would be anticipating a pull back down into the 163 level, 162.77. At the same time, that if that happened, I am probably looking at a potential of bullish divergence on the momentum, which is a very, which is positive for the longer term. So we could see, the third quarter of this year is going to be very, very important. Are we going to continue to basically rip up? So you sell the rips instead of buying the dips? We'll check it out. Anyway, that's what I got for the indexes, guys. What do you think?
I pretty much agree. I think I lean toward the market firming, but it's really in no man's land right now. It can go either way.
Agree wholeheartedly. Anil.
Sorry, I'm just waiting for my triple screen signal. Until it comes, I'm just going to be patient.
Okay, awesome. That's awesome. Jesse Livermore made a statement. He said, buy right and then sit tight. And so that's what we're all trying to do. And oftentimes, I think one of the biggest enemies of traders and investors can be the being over anxious to get into a potential trade. Hey, Justin, how you doing? And Jeff, glad to see you guys over there. And so that's what we've got going on for the indexes. Now let's jump over into stocks for the day. Steve switched horses on me, guys, in the middle of the stream. He's going to go with Merck instead of
Lilly.
Although
I consider them both the same trade, basically. They're in the same sector, got very similar charts.
Right.
And as I really look closely, I think I like Merck a little better. But I would trade one or the other or both.
Okay.
But they're the same trade. Anyway, the sector's been kind of hot for about 2 months.
Okay.
Got good relative strength, and I think it's holding very well in this market pullback. And I see in Merck, I see a reversal bar today. I'd be buying above today's high on Monday.
Awesome.
Aggressive, you could be buying today.
Okay.
And then depends on your trading style.
I like it. And so just to refresh people on your rule, Steve, if you bought above the high of today, your stop loss would be below the low of today.
Correct.
Yes? Correct.
Very tight. As tight as I can make it. Yeah.
Are you giving it? Are you giving it like a nickel or a dime to the downside?
Yeah, I give it a between 3 and 5 cents to the downside, below the actual low. Yeah.
So we're talking tight.
Very tight. Yeah.
Okay. Cool.
Yes. So, you have a triple screen signal on Merck that's active. It just became active a couple of days ago.
Sounds good.
Cool. I like it. Good pick, Steve. I do like this. Watch it, guys. It has, this could be shaping up for a pre-earnings run. Has earnings at the end of July. So next is, I think it's the same United Therapeutics. I think it's in the same industry group.
Yes, United Therapeutics. And the chart is looking good. I have a active triple screen signal and a very high comp rating, and also the up-down volume ratio and accumulation distribution. So I like it.
I like it too.
Pick. Are
you buying it here?
With a 3-day weekend, I'm not buying right now. It just see what happens.
I gotcha. Okay. Well, my stock for the day, guys, is this. Stand by and get ready for action, because I think we're gonna be taking some action here. Now we have to basically the IBD rankings on this stock are not good. I'm gonna throw that out there. They are not good. However, this is a specialty trade, and then I'm looking for an earnings run, because it has earnings coming up on 8/11. So I'm about 6 weeks out from earnings, and I'm in my sweet spot for potential earnings. I'm only interested in a 10%, 5 to 10% profit target. Let's take a look at cyber. And matter of fact, I'm going to do something one better for you on cyber. Okay, what am I going to do? we're going to actually trade this live right now. You ready for it? Let's go do this. Here we go. I'm going to go here to weekly daily chart here. And as you can see, if we close right where we're at right now, I would be putting in a bullish, bullish engulfing, but I got a spinning top doji at support. My stop is going to be immediately below this level. In other words, just slightly below the 126 level is where it's going to be. So that is, we'll lay that in place. So let's go ahead. But what I'm going to do is I'm going to jump over here to the intraday chart. Where am I expecting this to fall to? And what I'm doing is I'm going to take a look at this. Here is my stop loss. If I'm going to continue in the upward motion, my stop loss should stay right about there, okay? I should not take out that low. Now, I realize I have a low over here, but this is a low you want to stay above. So what am I going to do as I look at this right now? I can literally buy this right now because my target was, I'm going to go in here really quick, just hang on. Here was the low for today. Here was the high for today. Now I can go in here and say, okay, I could expect a pullback of 50%. I could put in a target buy right there. Or I could say, hey, I'm going to go up here just a little bit higher at, let's say, 129.60. 129.60 is where I want to buy. That's slightly above the 38% retracement. So I'm going to go ahead and jump in here. How am I going to do this? I'm using the ThinkorSwim platform. And I love this feature that I have been working with here lately. I'm going to do a custom buy sell. I'm going to do a OCO bracket order. You ready? And this is going to pop up. Now, what I'm going to do, I'm just going to buy, and not a lot. I'm going to buy 50 shares. Whoops, not 512, 50 shares. 50 shares. And again, this is a specialty trade. My profit target, let me go back and look at the profit target. My profit target is up here at about the 140 level, which corresponds to this level. Actually, there we go, is up into this area here, which is about 10% from where I'm currently at. So let's go ahead and lay in the rest of this trade. So I hit my gear, and I want this to be what price am I at currently? I'm at 129.83. So I'm good, 129.60. I'm just going to make it a good for the day order, 50 shares saved. Then I go to the next trade, which is what about my stop loss? Let's do the protection first. How many shares? Well, I got to reduce this to 50. What is my stop loss? And I can just throw this in as a straight stop loss, and it's going to be 126.44. However, if I'm filled on the first one, I want this to be good till cancel. So there we go. Save that. Now I'm going to go to where's my profit target? Because already, we want to know where that profit target is. And I can put in here a limit order up here at $140. $140. Again, I'm going to make it good till canceled. And again, we're going to make it only 50 shares. Pow. Now, if prices do not come down to the 129.60 level, this will not fill for us today. So I confirm. It looks good. Buy 50 shares of cyber with a limit of 129.60. Here's my stop loss at 126.44, good till canceled. My profit target 140, good till canceled. Save, edit. There we go. What I want to do is send and confirm. So that trade now is in the books and ready to go. And as you see, I'm displaying on my intraday chart where my profit targets are, as you can see here. Now, for whatever reason, I want to change this. Let's say I want to drag this up to here. I can literally just grab this box, drag it up to there, and then it'll give me a new level, which is really kind of cool. But I'm not going to do that. So I'll go ahead and delete that. Put it back down here. Now, if okay, I can basically take this line here, go up to where I want to fill at, drop down to here. So if I hit my stop loss, it'd be a 2.49% stop loss, and I would be out of the trade. If I go up here to this higher level, as you saw earlier, there it is right there. So now if we're filled on that one and it hits that level there, that would be a 7.4% profit target. So I'm within my limits. And so, Nicole, yeah, this is ThinkorSwim. And so this trade is ready to go. I mean, not only is it ready to go, it's gone. So I just want to give basically a flavor. We talk so much about, the trades we're going to make. Today I'm saying, you know what? I'm going to throw this trade on there, and we'll see if it gets filled or not. Maybe it does, maybe it doesn't. But a couple of things I want to be able for you to walk away with on this potential trade. One, I'm going to get rid of this right here. One is I have identified wholesale price that I'm willing to pay for cyber. I am not going to chase it. If I get filled at my level, great. I have my protection in place. I know what my risk factors are. I know what my upside is. So if I'm looking at 2.5, it's about a 3-to-1 risk reward. Excellent. So that's my trade for the week. And I hope you found that refreshing and helpful. If you're joining us on YouTube, and when you first watch this and you're going, wow, I'd like to see more stuff like that, give us a thumbs up, and also just make a comment there. And also, if you're joining us here live, did you find me putting on that trade to be helpful to you?
And different. Thank you.
What's that?
I said it was interesting and different. So thank you.
So, okay. Let's see. Anil, what's your stop loss?
Yeah, I just replied 4%.
Okay, 4%. Okay, guys, that basically covers what we're going to cover today. I'm going to basically run them back over here. So remember, learn how to trade is learn what to wait for, and then develop the discipline to wait for it. The thing I have to ask you right now is, how are you going to spend your Independence Day weekend? I encourage you to an hour and practice trade 25 to 50 trades. It will make you a better trader. If you do not know how to utilize the ThinkorSwim, TDAmeritrade's ThinkorSwim on-demand feature, teach yourself how to do that. I've got a video there on the YouTube channel about how to use the on-demand feature. Practice trading. I mean, it's one of those things where just trading the live market, waiting for your trades to come along, is not enough. The quicker you can get 25 to 50 to 100 trades under your belt, the more greater success you're going to have, and the more comfortable you'll feel in trading it. So, hey, if you are spending over 2 hours per week finding strong trade setups, you need to become an AutoPilot trader. You've heard me talk about it, but you can go to this link right there, and that will basically help you. Just check out the AutoPilot YouTube channel there. There is a QR code if you are a veteran or if you are a member of the Bay Area Moneymakers or an IBD meetup group. I do offer a discount. So, gentlemen, that's all I've got for today. Steve and Anil, I wanted to take a little bit of a different approach today as we get ready to celebrate the weekend. And so, any final comments, Steve and Anil?
None for me. I think just stay nimble.
Okay.
Stay patient.
Same thing here, and just watching patiently.
Watching patiently. So I agree. It's interesting. 2022, patience, persistence, and consistency is our theme for this year. Folks, just remember, back on that trade real quick, I had a very set parameters, and sometimes I will make a trade based on an event that's going to happen in the future, such as earnings, and then it becomes just a straight, basic, technical trade, And let me take one last look. Where's it sitting right now? Are we going to get filled? I don't know. We'll see. I'm target shooting my entry because I am a target shooter. So aloha, everybody. God bless. Have an absolutely fantastic weekend, barbecue, whatever you're going to do. And we'll see you next week. Aloha.
Okay, thank you. Bye now.
Bye-bye.